Alrighty, folks, everyone's favorite Tesla bear is back, predicting that Tesla stock is about to go down in a massive, massive way. And so we're going to watch this video. I want to hear what Gene Munster has to say, as well as Mr. Gordon Johnson, who is I would call him one of the most famous Tesla bears out there. We'll see what he has to say. Does he have any concrete anything around this, or is he just basically talking out of, just crazy and like, oh yeah, Tesla stock's going to crash? And then after that, we're going to watch even a more important video, in my opinion. RH CEO issues demand warning. That's actually, I think, a far more important video that I want to get into in this video. So let's listen in, and I'll give my opinion on this, okay?
Like a meme stock, like AMC or GME. Do you really think that there's enough similarities between Tesla and those two to all throw them in the same basket?
You notice Gene Munster kind of rolled his eyes there. They're putting Tesla stock into the meme stock category. Alrighty.
The circles overlap on the edges, and I would describe it as there is kind of a religious aspect to the Tesla conversation. People
based
feel
on something. No, the other ones. I don't need anyone sending in anything. But it seems like there's a little more to go on. I see a lot of Teslas on the road.
It's not I wouldn't put it in the meme stock. I see Gordon's point just about kind of the emotion around it. And I would just say this: the goal here is not to prescribe to one religion or the other, the believers or the non-believers. It's to identify what's going on with the fundamentals. And Gordon points out that there could be some talent attrition, some important talent that probably he's saying he's going to stay. He's not going to be around in 5 years. I feel good about that. But I think what's most important related to meme stocks and what the difference here is to the fundamentals. And that would come back to our job is to identify how many vehicles are they going to sell over the next 2 to 5 years. What's the profitability around those vehicles? I mean, it's as simple as that. And I would say on the identifying vehicle perspective, if we're going to take the approach of trying to cut through the noise, Gordon's great at sharing with me different insights he have. I have an insight for people to look at, and this is inspired by Rob Maurer, who is pretty active, I would say, in identifying every detail around Tesla. But Rob pointed out the GM has a new factory in Spring Hill, Michigan. It is their new electric Lyric is the new car. It's just opening up. They also have the Giga Berlin factory. Both of those have videos that have been released. One of them was produced by GM. The other was not produced by Tesla. But I would just look at those videos. And the reason why I mention that, I think it draws a stark distinction. Now,
wow. So far this year, Tesla's having an okay year given the market, up 3.7%. GM's down 21%. That's a rough start to the year.
GM is not the whole auto industry, but how traditional auto is approaching manufacturing versus how Tesla is. It is well spent 7 minutes of viewing. And I think that really anchors or is evidence to me about this gap that we have in terms of production and ultimately what I think is going to drive the stock, which is how many vehicles they're going to produce and sell. And one last point, and I'll turn it back to Gordon, is that they can't keep up with the demand. Shanghai being shut down, that's going to have potentially a negative impact on what the numbers are. That's very true in the near term.
Yeah, and that is something to consider if anybody is playing Tesla stock for a short-term perspective. Do keep in mind those numbers out of China could be hurt, and that has been a massive, massive help to Tesla's business. I mean, honestly, China could easily be the biggest individual market for Tesla, bigger than the U.S., bigger than Europe, bigger than anywhere else. So do keep in mind with the shutdowns that are going on over there and those sorts of things that could definitely hinder Tesla in the short term. Okay, so just keep that in mind, keep that in the back of your mind. So if they don't hit numbers over the next quarter or something like that, at least you'll be prepared for why they didn't.
I think when you see delivery times for Model 3 being this summer, Model Y, the earliest in the U.S. is October of 22 to January of 23. They give a range. They have reportedly 1.5 million pre-orders for Cybertruck. The Ford Electric 150 has somewhere around 250,000. Something bigger is going on, and we're just at the beginning of it.
Yeah, and we'll get to Gordon here, okay? But in my opinion, if you're a Tesla shareholder, you always got to focus these things on the long term. Short term, Tesla numbers can move around. What if a big recession comes? That's going to hurt Tesla's numbers in the short term. There's no doubt. Shanghai shutting down, right? That's going to hurt numbers. Like you have all these kind of moving parts that can hurt this stock in the short term. But the important thing to remember is, one, most of Tesla's shareholder base is in the stock for the long term. You get some folks that trade it around, especially based upon a hype event or something like that. But most folks are in this for the long term. And you know, obviously, if you're in Tesla, it's for the long-term opportunities, for the next 5-10 years. It's for the fact that everybody's going to switch over to EVs over the next decade or two, and Tesla's the biggest player in that market and the most famous name and the best, the most well-suited to become a, you know, producer that's producing 5-10+ million vehicles a year, plus their other businesses, right? And so I think those are just important factors to remind yourself of. You know, the short term, a lot can happen. Obviously, that's actually out of, if China wants to shut down Shanghai and says your factory has to be closed for a month, let's say, for instance, Tesla, they can't control that. It's completely out of their control, and that just is what it is. It hurts short term, but at the end of the day, it's meaningless over the long term.
If you were actually short the stock, I was thinking it looked like you were doing okay there earlier this month, and you could have covered at 750, just or around there. I'm just wondering, as a guy that comes on and talks about Tesla, wouldn't that have been a good time to throw in the towel and say, all right, it's cheap enough now where I'm going long, and I'm a believer now? Or do you think we're going back? Do you think we'll go back down all the way to where it was, where you saw on that chart, and then back below that? And you think it'll be below 500 pre-split again?
Yeah, I think
below 500. For reference, Tesla's 1,000 and change right now. So, I mean, that would be over a 50% fall. That would be a pretty dramatic crash. All things are definitely possible, especially in this sort of market with all this volatility and all these moving parts. But let's not forget that would be a pretty, you know, it would be down there, right? That's over a 50% fall from here. So it's a big prediction.
It's going significantly lower. And listen, Joe, you get bear market rallies. Look, we're at an S&P level right now above where we were at pre-war, yet the war hasn't ended. And you have earnings coming out that I think are going to be bad. But to Gene's point, listen, we could talk about videos made unofficially by fanboys of Tesla and comparing that to videos made by GM. But let's look at the numbers, Gene. Let's look at the 10K, where Tesla said their U.S. operations lost money. Their Shanghai operations were over 100% of their profit. Look at the Shanghai operation specifically. All of the costs are back and loaded. So I think Tesla is one of the least efficient manufacturers of cars. And what's important, Gene, is how many cars they're going to produce. To get to a valuation that justifies a company valued at more than the entire auto industry combined, they need to be adding roughly 100,000 cars a quarter of incremental sales. And I believe their sales this quarter could actually be down. So I think you got to look at the reality, Gene, and not just look at these kind of anecdotal details from Tesla, you know, Twitter writers. And one last thing I'll note, again.
So let me just attack that real quick. You know, when you're an auto manufacturer in a cyclical industry like Tesla is, and especially given the market, supply chains, all those sorts of things, you know, the numbers are going to be like this, right? But you're going to have some periods that are just insane. And so I think it's very, very important to remember, like I remember Q1 of 2019 when the company, their revenue was down several $1 billion on a sequential basis. And for anybody that was a Tesla shareholder has, you know, heard me speak about this in the past, there's people saying that Tesla's demand was done. Folks like Gordon Johnson were talking about this is, you know, Tesla's already reached their peak, essentially, right? And just ridiculous. Obviously, that was completely not true. And the numbers they do today completely dwarf what they were doing in Q1 of 2019. Like, it's like night and day. You can't even compare these things. And never mind the numbers. Well, I just saw a bubble. That was completely random. Like a random bubble just appeared in that window there. But, you know, to say, oh, you know, their demand's done or something like that, because even if the numbers are ever hit short term, it's just completely ridiculous. It's a cyclical industry. It's going to go through some hot cycles. But what we do know at the end of the day is everybody's coming over the EV wave over the next decade, and there's no stopping that. And we know Tesla's the biggest player in this market and the one that's in the position to capitalize on this. And so let's not forget those very core points Gordon's not bringing up here, right?
It's very important to keep in mind their market share is falling. And again, when these Q1 numbers come out, what's going to happen? And the fact that they 8K'd an event that's 6 months out, I think that speaks volumes to what they're looking at. It looks like they're more focused on the stock versus the product. So Joe, I think that, you know, as the market, this bear market rally fizzles out, which we think is happening, I think that the numbers that are coming out of Tesla are going to disappoint. And I think the stock has significant downside here. And to the meme perspective, I think it is a meme stock because you have them doing things like putting out 8Ks on events that haven't even happened versus real events like their Shanghai factory being shut down. So I think we got to focus on the fundamentals. And when you do that, it doesn't look good.
Shepard Smith here.
when you do, wow, Tesla's fundamentals don't look good. Okay, so first off, Gordon has been a bear on Tesla for many, many years. Secondly, he's clearly bearish on the market as well. You heard what he said there. He said as soon as the bear market rally fizzles out. So clearly he's a bear on the market. So he's been a Tesla bear for a long, long time, which we know Tesla's up thousands of % since then. He's clearly bearish about the market. He's only going to look at everything in regards to Tesla from a negative perspective. Now, my opinion is, can Tesla stock go down in the short term? Absolutely. And I think anybody that can at least fathom that is way too much drinking the Kool-Aid, I would say, on that. Tesla's a very volatile stock. The numbers are going to move around a lot. And when it comes to longs, they give a good base around Tesla stock, but there's about a $300, $400 price there that can be very dictated upon hype, excitement, short-term things that are going on with Tesla stock. So is it possible that Tesla stock could fall several $100s? Absolutely. But that doesn't mean it's absolutely going to happen. And do keep in mind that the long term is looking very, very bright from Tesla. And that's factual. Like, just look at the numbers over the last few years. Like, there's no debating that. Gordon likes to act like, the numbers that Tesla's put up over the past 5 years are just like nothing. Like, look at their revenue growth over the last 5 years. Look at how they flipped this baby from a massive loss company to a massively profitable company, and their profits just increasing. In a time period that's been horrible for business profitability, with supply chains messed up and everything that's been going on with Rona. And oh my gosh, I mean, for this company have done what they've done over the last few years, it's just a testament to the executive team and the brand. So this is actually a more important video that I want to watch here. RH CEO, Restoration Hardware, is a furniture company, issues demand warning. Okay, let's listen.
Be worried about the housing trade because of, say, rising rates. The CEO of RH is signaling there may be even more pain ahead. Gary Friedman telling investors on last night's earnings call, we've experienced softening demand in the first quarter that coincided with Russia's invasion of Ukraine in late February and the market volatility that followed. Friedman at one point compared the macro picture to the collapse of Bear Stearns, suggesting we still don't understand how big an impact inflation and supply chains are going to have. He said predicting
So first off, I'm going to listen to this entire RH conference call tonight. I am super intrigued to listen to this baby. I think it's going to be a juicy one, and make sure you guys listen to it on Hungry Bowl, okay? It's absolutely free to use, and listen to that conference call, because that's some big comments there. I think that's huge. By the way, make sure you guys are free stocks. This deal is about to end here in the next 24 hours or so. Right now, Mumu, check out pinned comment down there. Deposit any amount of money, get 3 free stocks before it ends, okay?
Now is as hard to predict as it was back in 2008. These are words that investors do not want to hear, Karen. So I think the question is this sort of a canary in the coal mine, or are they just kitchen sinking, giving the most conservative sandbag kind of guide?
So when it comes to RH, they sell high-end furniture. Almost all the furniture in this house is RH. And they definitely, most of RH's customer base is folks that have, net worths of 7 figures, 8 figures, 9 figures, and beyond. And so, because if you furnish a house with an RH, you're looking at, $100,000 to $300,000 worth of furniture, essentially. And so when it comes to a company like RH, that's high end of the housing market. That's really high end of the housing market. And if there's a pullback there, then it's clearly folks that have a lot of money that aren't maybe out there buying new homes in the high end, or aren't just looking to spend that type of money right now, right? And so it is very important to remember, this was a stock that I really wanted to buy put options on back in the summertime when it was like $700 a share. I never ended up doing it. I wasn't going to do like a huge amount. I was going to buy like maybe 10K or 20K worth of put options. And oh my gosh, like that 10K or 20K would be worth probably 100 to 200,000 now. So I missed a massive opportunity there, but it is what it is, yeah. But when it comes to RH, a really well-run company, but this is a cyclical company, and they can't control the housing market. And if the housing market on the high end, and we've been talking about the housing market quite a bit the last 48 hours on the channel, if the high-end housing market weakens, it hurts RH. Believe me, it hurts RH.
That is a great question, because the first part of the call was sort of this soaring rhetoric about what RH can be, and, scaling, taste doesn't scale, or you have to scale taste, or whatever they're saying is, and about all the things they're doing, the RH jet and the RH yacht and the RH architecture firm, the RH housing. They're talking about having RH houses
conference call.
That they
sounds
build
good,
and furnish.
Man.
So those two things are very much in opposition to one another. All that having been said, though, it's interesting to me, just like a Zoom or a DocuSign, RH is close to, not quite, but close to entirely losing all of their pandemic stock boom and now bust. And
I like Karen. She always brings up good points. Why are there so many bubbles? Oh, you know what? I think kids move next door. They're probably blowing bubbles like crazy. There's like a bubble fest going on outside right now. I would show you guys, but I can't. But anyways, I like Karen. She always brings up good points. And yeah, I mean, this stock's pretty much getting back to levels we saw it at, basically prior to Rona, which is quite interesting.
Inflation is actually starting to get interesting to me. You try to, invoke the 3-day rule, so we're only at day 1, and I'm not very good at the rules, so I don't know if
forward P of 13. The one issue with that forward P with an RH is it's like, well, if their demand's weakening in a major way, maybe they don't quite hit those EPS numbers, right? And so this is something to keep in mind. The P looks insanely low at a 13 for a growth company like RH, but shoot, if all of a sudden demand's going away, they're not going to hit those EPS targets, especially in the back half of the year, and all of a sudden you're stuck with the stock the real forward P could be 30 or 40 or something like that. So this is something to keep in mind.
Goes down tomorrow, I might look to start buying there. I don't know that the end of RH is in sight. Maybe they could scale back some of their ambitions, but I think that clearly higher rates are going to be hard for the housing trade. But I don't necessarily think it's the end for RH at all. We haven't seen a valuation like this.
RH is a great company, but definitely take a peek at the balance sheet and see, their latest quarterly numbers. You can get their 10Q basically on their investor relations page. Check out their latest quarterly numbers when it comes to their balance sheet, specifically around cash and investments versus debts. I think that's an important line item if you are thinking about we go into any sort of downturn that could hurt RH's business for, let's say, a year, 2 years, something like that.
2 years.
I mean, the higher rates, the supply chain aspect, and we talked about the cost of ocean shipping has doubled and then went up just recently again. And so that's going up. So the costs are going up. And then there's that pull forward effect too, Bonawyn, that a lot of these other stocks had seen, like the DocuSign that Karen had referenced. I mean, if you bought a bureau and a floor lamp, you're not going to buy another one. Tim's not going to buy another one anytime soon. He bought it already.
Well, he's got a lot of clothes, and those sweaters need space.
Man.
Karen makes a great point in terms of the pull forward, and I think there is a large part of that there, and there's no argument there. I'm in lockstep with her. I will say, as far as the consumer is concerned, I would argue that the consumer that they appeal to probably has the most disposable income vis-a-vis, say, a Home Depot or a Target or Lowe's or any other type of, I guess Target doesn't really belong there, but any other type of general home improvement type of center. So I think, those headwinds are going to be there for everyone. The inflation story, if they were trying to scare investors, I think they did a good job, which makes me think maybe they are kind of kitchen sinking it. I will probably stick to Karen's 3-day rule and wait and see how this thing trades and see if it kind of starts to find a technical level. But I think the thing that they have going for them is that they do appeal to that higher end consumer, which is going to have more disposable income, favorable loan terms, things of that nature. And so the interest rate story doesn't hit them one for one the same way it would hit someone else.
All right. Well, while the home trade suffers, it appears that investors are buying in bulk. Take a look at Costco.
Okay, so that's about it for that whole deal. So when it comes to RH, this is very much, a Wynn type stock, a Toll Brothers type stock, that they appeal to obviously the higher end of the market, which I think is very, very important to kind of pay attention to. And we've seen with Toll Brothers stock recently, I looked at that one and that one's not doing much. I mean, it's much closer to 52-week lows than it is 52-week highs. RH is at, basically about a multi-year low now, okay? And so when you look at these stocks, there's clearly something going on housing related. And when you talk about mortgage rates going up and up and up, it doesn't help. That's just going to make the matter worse, right? And so this is a tough thing for me. I like RH as a long-term company, but I can't step in right now, especially with how many other stocks have been devastated in this market. I can't step in and buy this one. If it gets down to under 200, okay, now we're really talking, right? But I actually like RH around 3, but I can't buy that stock. Just there's too many other deals in the market, and there's way too much cloudiness, I think, when it comes to housing in the back half of the year and the numbers these companies might put up or might not put up. And if mortgage rates keep ticking up, which they probably are, that's not a great thing for housing. And we all know that, okay? And so this is stuff that's very important to pay attention to. And I think it's stuff that, if you're thinking about, conference calls to listen to what these companies have to say, because they'll give you a good insight on what's actually going on in the market, okay? So anyways, guys, hope you enjoyed this as always. Much love. Make sure you get those free Moo stocks before that deal's about to end. Check out pinned comment down there to deposit any amount of money. Get 3 free stocks. Much love and have a great day.